Hey everyone, welcome back to Your Nifty Guy. I hope all of you are doing well. Today's market turned out to be another choppy session, no clear direction, and honestly, I didn't find any clean trades worth taking. But that's part of the process. Some days are for observing and learning rather than trading. In this video, I'll break down how the market moved and what key zones I'm watching for tomorrow, and how we can be ready for cleaner opportunities ahead. If you find this analysis useful, make sure to hit that like button, subscribe to the channel, and share your thoughts in the comments below. We'll start straight with the charts. Uh, so Nifty opened with a gap down. The Fed did cut the interest rates, but I believe that is something which was already factored in the moves which preceded the market. So this is something which was already anticipated, and that is what uh, the Fed did, and it only cut the interest rate by 25 basis points. Had they done it by 50 basis points, that would have been a surprise, and that would have led markets to go up. But then again, this is my analysis of the macroeconomic scenario which is happening. So markets opened with a gap down, immediately went into a sell mode, breaching down below previous day's low as well as the support, the fib support that we had drawn, breached slightly below it, gave us pullback, made a higher low, and formed a double bottom on the chart. Now, this was a good setup to trade, but then again, there are certain filters that I use personally on trades like this. So the stop loss, right? Tell me if we are entering into a long trade at the break of this double bottom pattern. Our stop loss, the most logical stop loss has to be around these levels, right? And if we are putting a stop loss around these levels, this is the big stop loss, and we already are in a sideways range, right? That is the reason I did not take this trade at the breakout of this particular move. I was also discussing the same with Siddesh from the community, and even he pointed out that the double bottom is forming on the chart. I'm very glad that he identified it. But then again, I told him the same thing as well, that because the stop loss is going to be big, what we need to do is we need to wait for some form of a pullback after the breakout, and then using that smaller pullback as a stop loss, we can take a long entry. And that is what saved us from entering into a trade which would have been resulting into a stop loss, because markets immediately, this was just a liquidity move. Markets came down immediately, and when when markets was starting to come down, this is where I drew this particular trend line. So this is nothing but if you draw another trend line here, so markets fell down, the pole, the flag consolidated in a sideways range, and then continued the downward journey. But then again, after this, we needed a pullback. The pullback also did come in. Now, this could have been a entry, but then again, keeping in mind the RSI, which was way higher up compared to the previous swing low, right? If you compare the previous swing low, it is around here, but if you compare the major swing low, the RSI was way higher, and that is the reason I wanted for the markets to give me some clear indication. And then again, look at this choppy price action, right? Extremely bad price action around these levels. Markets did eventually go down below uh, this low as well as the low which was created, and then again followed by another choppy price action. So that was the reason I did not take any trades today. Extremely choppy session. Uh, if we actually look for on a daily time frame, like I had also mentioned earlier, we are stuck in a range again. I'll quickly hide all the drawings, right? So this is the higher end of the range, this is the lower end of the range, and we are completely stuck inside it. This is a sideways consolidation, and a breakout or a breakdown from this particular range will define the next move, which is going to take place in Nifty. And till the time being we are in this range, it is going to be a little choppy. So if you uh, zoom out on a 75 minutes time frame, you can see exactly this high this low, and we are in this particular range without any clear price action, right? For tomorrow, I'll keep the plan of action again very, very simple. Number one, keep the trading to a very low quantity. We'll delete this. I don't even need this for my charts, and I'll also just push this back a little bit. Okay. So because this is the line that we have around here, and here are the higher and lower end of the ranges, we'll be keeping them on our charts for some time now. Yeah, for tomorrow, simple plan of action. This is where we short the market for creating a long, as long as this swing is protected. We'll again use fib to find out safe levels. So this zone will be acting as a resistance. We'll mark it in red. Come back again to 15 minutes. If we move back up around these levels, look at creating a short entry. Above this with a price action, we can look at creating a long entry. We actually do not need to wait for exactly prices to move back beyond the 0.618 levels, because the point 0.5 level is also coinciding with these particular swing highs from where the selling had come in. This was the last major swing high. So even if we are moving above the swing high, we can also take a long entry, right? Because this is well above based on price action, of course. Price action confirming, do not commit to the market until and unless the market commits to you. Now, although the price action on an intraday basis was very, very choppy, on a daily time frame, we have formed a good bearish candle. Now we are inside a range, so that is what I told you around the three candlestick characteristics that we look at for determining trend change. Every day the trend is changing, right? On this particular day, which is the 24th of October, as per the candlestick rules, we had a lower high compared to previous candle, lower low compared to previous candle. We got a closing below the previous candle. The very next day, we got a higher high, higher low, and a closing above the previous candle's high. The next day was on a doji. Then again, we got a candle which confirmed the trend on the upside. And then today, again, we have got a reversal signal. So this is nothing but characteristic of a sideways consolidation. And of course, we need to wait for the market to give us a clear signal before it decides its next set of move. But then, until unless it does that, we will be planning and playing it very, very carefully. So this is going to be the precise plan for tomorrow. What can also be done is make sure to keep an eye out in case if the market opens flattish to with a very small gap down, but within this particular range, and we form a bearish candle, which gives us a closing below yesterday's low, and then the high of that candle gets taken out. This will give a good scalping opportunity on the upper end. This is nothing but a trap trading pattern wherein previous day low gets broken down, and a bearish candle shows that new sellers have entered the markets. And once the high of that candle gets taken out, it means all the stop losses will be triggered, leading to a rally on the upside in the market, which we need to capitalize using our scalping, right? Even if we are in these trades, well, target these swings as the basic targets, right? Based on the momentum, we'll decide and we'll trail it out. So let me just check for RSI again, nothing. Okay. So we'll take each day as it comes, and this will be the simple, precise, and sweet trading plan for tomorrow. Make sure to reduce your quantities right now because we are in a bigger sideways zone and there is some choppiness which is expected. So make sure to reduce your quantities and trail your uh, profits very, very tightly, as well as be very, very quick in taking your stop losses if triggered. And stay away from FOMO trading. Try to take only the trades which are high probable ones. Even if there is a slight confusion, let it pass, right? Even if you are not 100% convinced about a particular trade setup, let it pass. What happens after such choppy days is a good clean move which comes in, and that is where we will be capitalizing it. So we are prepared for everything. So that's it for today's session, guys. Not every day will give us a tradable move, and that's perfectly fine. The key is to stay patient, protect your capital, and be ready when the right setup appears. Thanks for watching, and I'll see you in tomorrow's video with a fresh trade plan. Till then, stay disciplined and keep learning. Cheers, guys. Thanks for tuning in.